Market Watcher Wayne McCurrie is in the studio, but before we get to him, though, let's get the business news. Headlines from Hilton Tarrant.
Well, Able Hep's down 21% on a BEE charge. Netcare headline earnings also down 21%. It sees a tough UK market ahead. ArcelorMittal cuts local steel prices for the third month running, and Alistair Darling is set to cut VAT in the UK to 15% from 17.5%. The oil share closed up 5% at 18,984. Gold currently 7% higher at $828 a fine ounce. A barrel of Brent at $48. The rand at 10.20 to the dollar, 15.37 to the pound, and the euro at 13.10. Get MoneyWeb SMS updates on your cell phone while you're out of the office. To subscribe, SMS the word alerts to 37780.
Alistair Darling is decided to cut the VAT in the UK. I like the way Hilton.
Well, look, I suppose it's an easy way to implement a fiscal package. You know, it's better than trying to give tax rebates or trying to target areas. You just cut VAT. In theory, that puts more money into everyone's pocket.
But if the economy is falling, so tax receipts will be falling.
But look, you already know that fiscally they're in a very, very bad position. So, you know, whether they cut the tax or spend the money, you know, the government's going to be worse off in a year's time.
Let's understand. Let's think like Warren Buffett would think about this. So you've got a situation here where already they've got quite a big deficit.
Yes, big.
Yes. They're spending much more than they're getting in. Now they're cutting the tax VAT rate, and they're going to be in a situation where the companies are going to give in less revenue. Is it a political move?
No, look, this is obviously everything in politics is politics at the end of the day. But they're caught between a rock and a hard place. They've got no option, and this goes for. This goes for government, not South Africa, but this goes for governments virtually throughout the world, with the possible exception of South Africa, even though we are spending more. I mean, we've gone into deficit, but not for quite the same reasons. The government's fiscal position is going to be extremely poor in the major world economies for a number of years. I mean, in fact, in a few economies, it's already extremely poor. But luckily enough, the one possible saving grace is that the world is going to enter a period of massive deflation next year. And in a deflationary environment, you can put in a lot of fiscal and monetary stimulus. In other words, throw money at the problem without at least the inflation problem.
Some way down the line, somebody's going to pay for it.
Yeah,
and the taxpayers are the people who are paying for
this. Well,
this.
Interesting enough, somewhere down the line, let's say 5 years' time, inflation may pay the bill. In other words, consumers may pay it directly via inflation.
All right, but that's the big picture.
Yes.
The smaller, and it seems as though the British economy is in about as good a shape as their rugby team is at the moment.
Yeah,
and
it's not in good news.
And well done to our booker, wasn't that
They did very well,
awesome performance. The green that the Springboks had on Saturday have come to our stock market, particularly the gold shares. Harmony and Goldfields up by more than 20% on a single.
And this goes after the 20% on Friday, remember. They were up strongly on Friday as well. So these are big movements. Apparently there's rumors going around, and maybe it is now becoming apparent in the actual physical gold price, that there's a shortage of gold, actual gold for minting coins, etc., etc. It might be temporary, it might be a rumor, but understand, if the current environment continues, now when I say current, it's all of 2 days old, but if this continues, everything's going to rally. I mean, gold, platinum, oil, coal, the stock markets, the rand, everything will rally.
Because prices have fallen too far.
They've just fallen too far too quickly. And they could rally substantially, and it might last 1, 2, 3 months. What happens after that is the big decision. I think you can pencil in your diary that we are going to get a bounce. I mean, it's happened every single other time we've had a major fall, and it probably is long overdue. But, you know, as I said, the big question will be what happens after that. And that will in turn be dependent on the actual state of the economy more so than just a technical rally.
But if you have bad news, you still get hit. Huge Group, who are competitors with Vox Telecom, down 31% today. Afrox down 6%.
Afrox was strange, I must say.
Negative outlook.
Yeah,
well, there was a negative outlook.
Yeah, I suppose so, yeah.
And then you had Old Mutual down to R7.53.
Yeah, look, I think
5% lower.
I think there's trouble there. Well, not I think there is trouble. We all know that. I mean, Old Mutual's trading at a 15% dividend yield. So it's clearly telling you the dividend's going to halve, if not disappear.
What about Reinet? Johan Rupert on this program a while ago was telling us that it was good value. I think at 12 Rand, it's now at 8.50 Rand.
Yeah, look. In theory, that's good value, quite a bit above 12 Rand, because that's where its net asset value is. Remember, at the moment, it basically consists of BAT shares. They are going to sell those shares to raise cash to go into all the private ventures. But, you know, analysts totally concur with that. It looks incredibly cheap, below 10 Rand. But that didn't stop it, as you said, falling 4%. Look, there's maybe some another element to remember with Reinet. There's a lot of people who own very small holdings in Reinet, overseas people. You don't really know the Ruperts and don't really want to hold their Reinet shares forever, so they're just selling.
So they
could just be selling pressures of very, very small holdings, and that, of course, will come to an end eventually, and then maybe that's a good time to buy.
Wayne, just to close off with, the Super Group share price is down to R2.70 today.
Yes.
They had a rights issue just the other day at R4 a share.
They were forced to have a rights issue. They had no option whatsoever. They had
what
to
is the
raise
market
cash.
telling you if the price is down to R2.70?
Well, look, there's only two outcomes for Super Group. Either it is incredibly cheap and the market is being way too pessimistic about Super Group, or that might be our one major SA industrial company that could be in serious cash flow and liquidity problems.